The Graph coin is kinda bullish right now and the market capitalization is almost at $1 billion. With this, I am sure a lot of investors would want to know more about this coin project. Without wasting much of your time, in this video, I will be giving you the total breakdown of the Graph coin, if it's still a good investment at $1 billion market cap and the price prediction of Graph coin. But before getting into the discussion, I'm Nay, a crypto enthusiast and investor. Please note that I'm not a financial advisor. Anything I say about coins I talk about are from my researches and opinions. So when investing in any coin I recommend, kindly do a little more research to be on the safer side and do not forget to invest wisely. Also, do not forget to hit the like and subscribe buttons, so this video can reach more people. Without much saying, let's get into the discussion. The Graph is a decentralized protocol for indexing and querying blockchain data. The Graph makes it possible to query data that is difficult to query directly. Projects with complex smart contracts like Uniswap and NFTs initiatives like Bored Ape Yacht Club store data on the Ethereum blockchain, making it really difficult to read anything other than basic data directly from the blockchain. In the case of Bored Ape Yacht Club, we can perform basic read operations on the contract like getting the owner of a certain ape, getting the content array of an ape based on their ID, or the total supply, as these read operations are programmed directly into the smart contract, but more advanced real-world queries and operations like aggregation, search, relationships, and non-trivial filtering are not possible. For example, if we wanted to query for apes that are owned by a certain address, and filter by one of its characteristics, we would not be able to get that information by interacting directly with the contract itself. To get this data, you would have to process every single transfer event ever emitted, read the metadata from IPFS using the token ID and IPFS hash, and then aggregate it. Even for these types of relatively simple questions, it would take hours or even days for a decentralized application, DApp, running in a browser to get an answer. You could also build out your own server, process the transactions there, save them to a database, and build an API endpoint on top of it all in order to query the data. However, this option is resource-intensive, needs maintenance, presents a single point of failure, and breaks important security properties required for decentralization. Blockchain properties like finality, chain reorganizations, or Uncle D blocks complicate this process further, and make it not just time-consuming but conceptually hard to retrieve correct query results from blockchain data. The Graph solves this with a decentralized protocol that indexes and enables the performant and efficient querying of blockchain data. Blockchain properties like finality, chain reorganizations, or Uncle D blocks complicate this process further, and make it not just time-consuming but conceptually hard to retrieve correct query results from blockchain data. The Graph solves this with a decentralized protocol that indexes and enables the performant and efficient querying of blockchain data. According to how the Graph works, the Graph learns what and how to index Ethereum data based on subgraph descriptions, known as the subgraph manifest. The subgraph description defines the smart contracts of interest for a subgraph, the events in those contracts to pay attention to, and how to map event data to data that the Graph will store in its database. Once you have written a subgraph manifest, you use the Graph CLI to store the definition in IPFS and tell the indexer to start indexing data for that subgraph. The Graph network is a decentralized indexing protocol for organizing blockchain data. Applications use GraphQL to query open APIs called subgraphs to retrieve data that is indexed on the network. With the Graph, developers can build serverless applications that run entirely on public infrastructure. The Graph network consists of indexers, curators, and delegators that provide services to the network and serve data to Web3 applications. Consumers use the applications and consume the data. To ensure economic security of the graph network and the integrity of data being queried, participants stake and use graph tokens, GRT. GRT is a work utility token that is an ERC-20 used to allocate resources in the network. Active indexers, curators and delegators can provide services and earn income from the network, proportional to the amount of work they perform and their GRT stake. Graph's decentralized network has been engineered and refined to create a robust indexing and querying experience, and it's getting better every day thanks to thousands of contributors around the world. The benefits of this decentralized protocol cannot be replicated by running a graph node locally. The graph network is more reliable, more efficient, and less expensive. The benefits of graph network are 60 to 98% lower monthly cost, $0 infrastructure setup costs, superior uptime, access to 438 indexers, and counting, 24/7 technical support by global community. The graph's decentralized network gives users access to geographic redundancy that does not exist when self-hosting a graph node. Queries are served reliably thanks to 99.9% plus uptime, achieved by 168 indexers, and counting, securing the network globally. Bottom line: the graph network is less expensive, easier to use, and produces superior results compared to running a graph node locally. According to indexing, indexers are node operators in the graph network that stake graph tokens, GRT, in order to provide indexing and query processing services. Indexers earn query fees and indexing rewards for their services. They also earn query fees that are rebated according to an exponential rebate function. GRT that is staked in the protocol is subject to a thawing period and can be slashed if indexers are malicious and serve incorrect data to applications or if they index incorrectly. Indexers also earn rewards for delegated stake from delegators to contribute to the network. Subgraphs to index based on the subgraph's curation signal, where curators stake GRT in order to indicate which subgraphs are high quality and should be prioritized. Consumers, e.g., applications, can also set parameters for which indexers process queries for their subgraphs and set preferences for query fee pricing. According to delegating, delegators are network participants who delegate, stake GRT to one or more indexers. Delegators contribute to securing the network without running a graph node themselves. By delegating to an indexer, delegators earn a portion of the indexer's query fees and rewards. The amount of queries an indexer can process depends on the indexer's own and delegated stake and the price the indexer charges for each query. So the more stake that is allocated to an indexer, the more potential queries they can process. According to curating, curators are critical to the graph decentralized economy. They use their knowledge of the Web3 ecosystem to assess and signal on the subgraphs that should be indexed by the graph network. Through the Explorer, curators are able to view network data to make signaling decisions. The graph network rewards curators who signal on good quality subgraphs with a share of the query fees that subgraphs generate. Curators are economically incentivized to signal early. These cues from curators are important for indexers, who can then process or index the data from these signaled subgraphs. When signaling, curators can decide to signal on a specific version of the subgraph or to signal using auto-migrate. When signaling using auto-migrate, a curator's shares will always be migrated to the latest version published by the developer. If you decide to signal on a specific version instead, shares will always stay on this specific version. Remember that curation is risky. Please do your diligence to make sure you curate on subgraphs you trust. Creating a subgraph is permissionless, so people can create subgraphs and call them any name they'd like. For more guidance on curation risks, check out the Graph Academy's Curation Guide. Finally, developers are the demand side of the graph ecosystem. Developers build subgraphs and publish them to the graph network. Then, they query live subgraphs with GraphQL in order to power their applications. At the moment of making this video, the Graph coin is trading around 9 cents. With a market capitalization of over $800 million, a fully diluted market cap of around $950 million, and a 24-hour trading volume of over $20 million. With the white paper on Graph, you can tell that this is a very good project. But I won't advise you to invest in the Graph coin. This is because as an investor, we are investing in a commodity that has a higher chance of becoming profitable in the long run. Seeing how far the Graph coin is right now, I do not think this project can give you massive return on investment because a project that has almost $1 billion market cap would find it hard to grow in the crypto space. Please note that I am not saying the Graph coin would be stagnant, but I am simply saying the growth wouldn't be big in the sense of giving you massive gain in a short period of time. If you want a huge growth, look for an undervalued project with less than $100 million in market capitalization. But if you want slow and steady growth just like Bitcoin and Ethereum, then you can still stick with the Graph coin. This will be the end of the video. Do not forget to like, share, subscribe, and invest wisely. Thanks.